Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar keeps to its bullish bias after the market rebounded 4 days ago off the 62.80 level. Along with that, posting an engulfing candle on Friday, continues its upward stride. Now looks towards 64.45 as a potential target, with the 60-day moving average seen above around 64.85.90. Towards this region may struggle due to the fact that we only seen stabs at the top side of around that 60-day moving average. So towards the level around 64.85 could be, or somewhat, profit taking and possibly seeing a reversal. Still, overall, in the next 24 hours, I do expect to see this market continue its upward move as the technicals have firmed, and with the RSI and the MACD married, does support the bullish case. Euro still continuing its upward trek, but not as strong as Friday, but nevertheless, the outside range day or the engulfing candle does support the move up towards this region around 106.5. Let's reassess from there, because if we can see a break above 106.75, then that would indicate a further rally, which on towards 107.40.45, or maybe even on towards this region, somewhere around 109. The dollar index, which measures the greenback strength against a basket of 6 major currencies, still remains in a negative 4-day pattern and looks towards the region of 105 as it currently trades around 105.75. And therefore they should put a further, or at least some confidence in the market. Along with that, the RSI and the MACD are married to support the bullish case, and therefore let's see if we can get to that top side level anywhere towards 106.5 to 106.75. But we need to see that top side cleared, otherwise we will get a pullback towards the bottom side of the range around 104.60. Dollar yen, well, the market not as strong as it was on Friday and giving back the gains rather quickly and now back to a negative bias. From that, the market is still set or destined for the challenge towards the region of 147.50.60. A break there would give further scope to the downside and bring in the target seen at 144.5 and reassess. Overall, though, I feel the market is somewhat getting to a negative bias due to the fact that that whipsaw price action and the rejection from 150 is still pretty much cemented in a downward bias, that is, but we need to see a little bit more confirmation to support the case down towards this region of 144.5. Sterling also holding to its gains after its engulfing candle, but not as strong as the Aussie or not as strong as the Euro, but still holding to a potential bias that could see a move up towards 123.40.60 and reassess. Any pullback is expected to be shallow. Well, the market didn't fill the gap and carried on towards that top side and now looking at 65 as a potential target. If we see a break above 1,865, that would give further scope on towards a potential target around 1,886 to 88. The engulfing candle, the very strong bias to the RSI, will or should put pressure on this top side, but it really depends on how bullish this market really is, as we find that when we get gaps in the market they tend to get filled, so we could easily see and should not rule out pullback towards the region of 1,834. Wrapping up with oil, the gap wasn't filled either, but finding resistance around this level of $86 a barrel. Towards there, or even slightly higher, around 86.70.80, I feel the market might struggle. But if we do see a break there, then that should take it all the way back, should re-challenge the highs of 94. A key point to keep an eye on this level, especially from the rejection of the $81 a barrel, could put the top side at risk. But I like to see the technicals firming up a little bit because we only have the RSI to support this case, and therefore could and maybe see this gap filled before any upward move. Well, that's a wrap. Thank you very much for joining me. As always, look out for the interest rate report. I hope you enjoyed the great start to the day.